Hello everyone, I am Pratap here. We are at lesson 26. This is about price action at leg out candle. And it is a very important concept. So you need to focus very carefully. And also, this lesson is having dependency on earlier lessons. You can access all the earlier lessons at our NeoStock YouTube channel. I provided the link in this video description, or you can go to NeoStock homepage. So at our homepage, you click on the tab posts. Some of you might be seeing the tab community. Click on the tab, then you get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the supply demand zone price action course. Here you have all the training lessons are available. In case if this is your first video, just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and complete this course, and then you can get into lesson 26. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. So in that channel, you have links to all the old videos are available. Not only the training videos, but also other analysis videos also you can access at our Telegram channel. And also any new videos we are going to release, we will be adding the links at our Telegram channel. Okay, now let's get into the lesson 26. This is about price action at leg out candle. Leg out candle, you can observe a special kind of a price action that I am going to explain. Let us assume this is a higher time frame demand zone. A rally base rally. Same concept you can apply for even supply zones also. And now look into this base candle and leg out candle. And you can get into the lower time frame details of this particular area. Probably lower time frame, you have a price action like this. But the price action is not completed. I just stopped it and I will continue. Maybe in this area, from here, in this area to in this area, again prices are coming from the top. At present, prices reached this maximum. At this area, this is the price action, let us assume. After that, again prices went down. That I am going to explain. If you observe in this area, you might have noticed a lower time frame zone is created here. Drop, base, rally and follow through candle. That way we can assume in this area, this is a drop, base, rally, follow through candle. In this demand zone, you might be having the actual institutional order flow. Probably in this area, the order flow is very strong because it is a fine-tuned zone. Let us draw this zone. So drop, base, rally we have drawn. If you draw the zone, same zone you can see in higher time frame like this. Probably in the week of this candle, probably higher time frame base candle, you have lower time frame order flow. Let us assume this is the way we have lower time frame order flow is available. Okay. But is this leg out candle formation in the lower time frame is completed? No, not yet. Why? Because the candle is closed at the high, but after that again prices came down. So that means after reaching, let us assume this is the candle at the high of the leg out candle. That means in this area. This is the high here. In the lower time frame, this is the high. That means this entire formation is This base candle and rally candle formation is like this: drop, base, rally, and follow through candle. What about while closing? After that again some more prices are drawn and you have a wick. What could have happened? Okay, after that let us assume we have a candle like this. This is a drop candle. Now can we say this is the close of this candle? This is the close of lower time frame close. Is it the low of this candle? No, it need not be. There could be some more price movement might be there. Again prices might be coming up. Maybe prices would have get into this zone and then again prices would have gone up and might have closed somewhere here. So let us see what happened further in this leg out candle. See, whatever we are discussing now, everything is this leg out formation during the lower time frames. What happened in the lower time frames? Now prices further went and again moved down and then again price had moved up. So from where this order flow is picked up? From this drop base rally. That means this drop base rally is responsible for this price movement. That means prices are picked up the orders from this lower time frame and then moved up and the price is closed somewhere here. Let us assume this close is exactly the close of this candle. That means we have a price action like this. Initially a zone is created, lower time frame zone. Institutions kept the order flow in this zone. That is what exactly here. If you go to lower time frame, you can see like this drop base rally. Prices moved up. Probably the order flow is very strong in this area. And again that made the prices move. And finally the candle is closed here. Here let me ask you a question. Next time, see now prices are moving up. Let us assume next candle prices again moved up and once again prices are entering into this zone. Do you take a trade in this zone, lower time frame zone? Yes or no? Mostly we say no. What could be the reason? Because this drop base rally is already tested. And moreover, the prices reached almost near to the distal line. That means there are higher chances this zone will be violated. Do everybody agree with these points? That is what we all learned, right? Once a zone is tested, next time if prices are entering into the zone, there are higher chances that the zone will be violated because institutions' order flow is already consumed. And that too, the candle went so deep inside, there are even more higher chances this will be violated. These are the points we will be definitely saying yes or no. Because that is how we learn the concepts. That is how so-called all our supply demand zone trainers are saying. Once a zone is tested, you cannot take a trade in that zone. These are the points they injected in our mind. Do we agree? Yes, we all agree. And the institutions also knows about it. This is how trainers are providing training to the students. That's why the traders will not be taking trades from this zone. Because the traders knows this is a tested zone and moreover prices went deep inside. They are very sure traders will not be taking trades from this zone. That's why they want to trap. What kind of trap? They are not trapping you actually. They are not making you take a trade. But in another way they are trapping you. What way they are trapping? Not to take trades in this zone. That way they are trapping you. Because you learn the subject, it is a tested zone, you cannot take the trade. The prices went more deep inside, you cannot take the trade because it is Almost next time it is going to be violated because most of the order flow, this zone is consumed. That is the reason why they set new order flows here. How do we know they set the new order flow? The reason is, everybody please concentrate here. The reason is the actual leg out, this is the leg out candle formation, is mainly because of this candle. This leg out formation is mainly because of this candle. It need not be one candle. In this example, I am showing you one candle. Sometimes maybe a rally and another rally candle, both together closed here. Like that also you can see. But anyway, in this example, let's everybody concentrate. Because of this candle, this leg out formation has been completed. What about the previous candles? Previous candles already went and again came down. They picked up the orders. That means you just eliminate all these candles. This one, this one, this one, this one. Just keep only this leg out candle. Then the structure looks like this. But maybe this wick might be missing. You are getting the wick because of this rally and again drop. Because of this wick, this entire candle you recognize it as a ERC candle. Expanded range candle or a large candle. That is what I explained in lesson 1. This is a large candle. Lesson 1 you learned small candles, medium candles and large candles. These large candles are called as ERC candles. Sometimes some of the large candles are failed ERC candles, if the body is even very small. But anyway, this is having enough body. Maybe even more wick is also there. But forget about the wick. If you forget about the wick, the candle might be looking like this. That means from here to here, the entire body of this leg out candle is formed and price is closed here. That is what closed here. So that means in the leg out formation, the major role is played by this candle. That means such a huge push this particular candle got. What could be the reason? Is it because of this particular drop base rally? Need not be always. Maybe rare situations this could be drop base rally, but it need not be always. How can we say it need not be always? Many times if you go one more time frame lower, exactly here you may see a drop base rally or maybe rally base rally. That means institutions creates a new order flow here and again they push the price in such a way the whole leg out will be formed because of this lower time frame candle. That means institutions keep huge order flow here. That you can observe only if you go one more time frame below. Generally what we think, okay, there is a drop base rally, this is a tested zone, don't take the trade. Now institution knows because it is a tested zone, nobody will take the trades. Okay, if you take the trades, what will happen? If you take the trades, what will happen? Next time when prices are entering, your trades also you will be placing here. Like you, so many people who land supply demand zone, price action, they will also keep their trades here. What will happen if we keep our trades? Definitely some of the institutions order flows, whatever they planned for the execution, that will be disturbed. It may not be big disturbance, but some disturbance will be there. Because of that, what will happen? Because the demand is increasing. Already institutions pending orders are here and we are adding our orders also. Both together, the demand will increase. Instead of executing the orders, institutional pending orders, as they are expecting, instead of execution of as per their expectation, somewhat their expectations will be reduced. Because our trades also will be executed, institutions, some of their trades will be executed, still there will be some more pending orders. Next time again prices are coming, we don't know how the market and how the execution will take place. That's why institutions don't want any disturbance from our side. That way they are ensuring this zone is looking like a tested zone, but they are adding the new order flow. Because of their new order flow, the actual leg out candle is formed. We are thinking leg out is formed because of all these candles. But strictly speaking, most of these candles they are the gone candles. But the real candle is, this is the one. Because of this candle only, the actual leg out formation, what you are seeing on the charts, that has been created. If you ignore all these wicks. So due to that reason, always we have to focus on this tested zone by going one more time frame lower. There you will be seeing an excellent institutional order flows. That is the area you can plan your trade. Next time again prices are retracing into this zone. It looks like we are taking a trade in the tested zone. But institutions, new orders, moreover, they are very strong orders. Why we are saying they are very strong orders? Because the whole leg out candle formation has done because of just this single lower time frame candle. If it is not single, maybe one more or two more candles additional will be there. Maybe you may see a picture like this. So in this example, what happened? Prices went, they deep inside and again started moving up. And there is one more candle. Now leg out candle formation has been done. So these two are the main reasons. In this candle, prices were going down, reached here. Now somewhere here, institutions, in this week, institutions might have created a drop-based rally or maybe a rally-based rally. There you have actual institutional order flow. They will create within this zone. Why within this zone? Because this zone should look like a tested zone for the demand and supply zone traders. So that they won't touch this zone next time when prices are entering. Because according to the supply demand zone theory, this is a tested zone and moreover prices are more deep inside also. That's why we don't care about this zone. We look for some other stocks. But institutions already created a order flow even in further lower time frames. And that will be helping the institutions next time when prices are entering in this area, that order flows will be executed and then again it will push the market up. That is the way they make sure their pending orders will be executed. And retail traders like us, then we never touch this zone. Because our theory says, don't touch tested zone. That is what so-called our great trainers in the market are saying always. Don't touch the tested zone. Don't touch the tested zone. So that is the reason why such kind of patterns, they will be helping you get very good trades. And moreover, very good margins also you get. Because institutions are ensuring retail traders like us, they won't enter into this area. This is one newly developed concept by myself. Because I observed this price action in the legouts for several times. Especially such kind of patterns you will be seeing when you use a failed ERC candle as a legout candle. It need not be always, but many times you will be seeing when failed ERC candles are there. Because in such kind of candles, you will be seeing such kind of patterns. That's why in our training lesson, first lesson itself, I introduced the concept called failed ERC candle. It's a very powerful concept. And nobody in the market using the concept failed ERC candle. But I observed this concept. Not only I observed, the entire failed ERC candle concept, already I developed the software. All these concepts, that is the reason why sometimes our software is identifying the zones having failed ERC candle as a legout. Every failed ERC candle you cannot use as a legout. Only in some special cases. That too, if you want to understand those special cases, you should learn a concept called dynamic view. What you are seeing on the charts, rally, base, rally, this is called static view. Then what is a dynamic view? I gave a detailed explanation about this dynamic view in Q&A question and answers second video. See the dynamic view about failed ERC legout candle. Please complete Q&A 2 question and answer session 2 video available in Q&A playlist. It is available in Q&A playlist. Go to the playlist, Q&A playlist, and then try to understand the dynamic view about the legout candles. We have Q&A playlist. Go to this playlist. We have a tab called playlist. There, see here you have a Q&A playlist. View full playlist. Go down. You have a Q&A 2 video. How to use failed ERC as a legout. Almost 10 months back I gave. This is a dedicated video. Someone asked a question at that time. To address the question, I prepared a presentation. Actually, such kind of presentation should be available in our main videos. But why I included at the time is because at the time only we started our training course. It is too early to explain about failed ERC candles. See, now itself you are getting some control about supply demand zone price action. If I started explaining these kind of concepts in the initial stage, you won't understand at all. Probably now you will be able to understand if you go through this video what exactly the dynamic view. Dynamic view is a very experienced people's level concept. But definitely now you will be able to understand, because several times in our everyday high liquidity zone analysis videos, whenever the situations comes, I am talking about dynamic views, I am talking about failed ERC candles. Actually, everybody should attend everyday HLQ analysis videos, because even though those lessons are about evaluating the performance of HLQ zones, but when there are some important concepts or some special concepts, because some price action may come in a specific stock. You may not see the same price action every time. Rarely you will get. That day I get an opportunity to teach a new concept for you. That's why most of the times, every week at least 2 or 3 videos, I am teaching you some new points or new concepts. The points which you have not learned earlier. Because we need to find some special charts. Then only I will be in a position to explain those concepts. So that is the reason why focus up. Everybody please complete this lesson before you get into the examples. Because in both the examples, I am going to explain 2 examples to talk about this special price action at the legout candle. What is the special price action? Prices should go up, again get into this fine-tuned lower time frame zone. From there it will pick up the orders, and again prices should go up, and the legout formation has to be completed from this candle or the next 1 or 2 candles or 3 candles maximum. Many times price action will be completed in a single candle itself. Sometimes it will take 2 candles. These are the 2 ideal scenarios. Sometimes maybe 3 candles. Because when institutions add a new order flow, sharply prices will move. It moved sharply. Maybe the candle time is completed. That's when it continued. It looks like part of the next candle. Let us assume it is a 5 minutes candle. So by the time it is entering into this zone, at the last 5th minute of the 5 minutes candle, prices entered. That means in just 1 minute, sharply it moved. By the time the time is completed, candle is completed, and continuation to that, again sharply prices moved up. That way it looks like 2 candles. Many times you see in 1 or 2 candles, rarely you may see 3 candles. When sharply the whole legout itself is completed in 1 or 2 lower time frame candles, what does it mean? It means the new order flow they created even at 1 more lower time frame below, probably that is having a very, very strong institutional order flow. And if you identify such kind of order flows, we get huge profits next time when prices are retracing into that zone. That is the reason why institutions are very clever. They are creating a scenario. What kind of scenario they created? They created a tested zone scenario. And then they created the new order flow and then pushed the prices up by adding a huge order flow here. And because of this push, this entire leg out candle formation has been completed. That's why understanding this pattern is very, very important. I should have given some good name for this pattern, but anyway, I just specified only a special price action in leg out candle because it is a new concept I developed. Maybe institutions are using, so far nobody observes this kind of price action. Definitely it is a very, very, very new concept. Once it will become a world concept, again institutions may not be using such kind of concepts because they come to know people like us observed their their way of creation of new order flows. That means what kind of actions they are taking to hide their order flows. Once we identified, then they will not be implementing. Maybe after 1 year or 2 years, this concept may be very familiar. Because at our group, there are many trainers also there. They are also attending our sessions. And also at our group, there are some people who provides the calls. They are also there. They have their own groups. And they will be suggesting, they will analyze and they will suggest to their subscribers. We have all kind of subscribers are there in our group. Even mutual funds also there, some people. They are also watching our videos. So they also knows what we are doing. But this is at the earlier stage, definitely. To get popularity to this concept, popularity means like our supply demand zone traders. Because people should learn. It will take definitely next 2 to 3 years time. Till that we will enjoy the profits whenever we find such kind of zones. And luckily our NeoStock software also identifies these kind of zones. This kind means rally base. See, this looks like a failed ERC candle. Not really, but such kind of. Many people will ignore these kind of zones. But we don't, NeoStock students won't, because you learn the concepts as small candles, medium candles and large candles. Because this candle comes under large candle category. Large candle, there is no 50% or 75% rules. As long as the body is coming out of the zone, that's a valid candle for us. But it should be a large candle. It can be a failed ERC candle or it can be even normal. This is not a failed ERC in this example. Some more, even half of the body, whatever the body is there, half of the body is there, then we would have considered this as a failed ERC. Still it is a valid leg out candle, even then. Because if the body is coming out of the zone, at least a considerable amount of the body should come out of the zone. Just near the zone border, if the body is there, come out of the zone, we won't consider. At least a minimum considerable amount of the body should come out of the zone. Maybe something like this. Then we confirm this is a large ERC candle as a leg out. Okay. Hope now you will complete this Q&A 2 video before we proceed to the next discussion about the examples. There you will see how exactly this concept is working and how we are identifying. 2 examples I will be giving you. The first example is about Astral. Astral is a 75 minutes high liquidity zone identified by our software. When this zone was created, and what is the leg in, leg out? See here. This is the Astral 75 minute zone. See, this is a failed ERC candle. Failed ERC candles are qualified as a leg in. Leg out also they qualify, but special scenarios. What is that special scenario? The body should, a considerable amount of the body should come out of the zone. Whether completely a part, but that should be a considerable. Otherwise, we won't use failed ERC candles as a leg out. Okay, anyway, leg in we can use whatever the way it is. This is looking like a drop candle if you apply the dynamic view concept. I already told you, you should complete dynamic view lesson in lesson, not lesson, in Q&A, question and answer, second video. There I explained dynamic view. So if you apply the dynamic view, you will recognize this candle as a drop candle. Because failed ERC candle, you don't bother about the color of the body. Failed ERC candle, you focus about how exactly the price movements are there at the time of closing the candle. Based on that, you apply the dynamic view, identify whether it is a rally or drop. At present, it is clearly saying it is like a drop candle. Prices are moving down, moving down, moving down. Okay, here you have a base candle and you have a rally candle. Our software is having intelligence to identify such kind of patterns. Some of the people may ignore such kind of zones. But such kind of zones, we are identifying the real order flows. And that too, our software identified this as a high liquidity zone, 75 minutes high liquidity zone. And this zone has to be fine-tuned with 15 minutes time frame. In the recent price action, there is a 15-minute zone is available. And this is a very old zone, almost when this leg-in was there. This leg-in was on 25th May 2023. Almost 1.5 years back, this zone was created. 1.5 years back. And 1.5 years back, up to 5 minutes, we can't fine-tune this zone. But recently, a 15-minute zone was created in the recent price action. That way, we will get a fine-tuned 5-minute zone in the recent. What I do, I will delete my analysis. Let me explain from the beginning so that it will be very clear. Okay, this is a 75 minutes. So inside this price action, we have a 15 minutes candle is available. 15 minutes zone is available. Okay, I am going to the 15 minutes time frame. See here. There is a drop, base, and this is a failed ERC candle. You have to apply the dynamic view. See here, failed ERC candle, we don't really focus on the body of the candle. Body is not important for us. The price, the dynamic view. See, at some point of time, prices came down. It looks like a very red candle. Do you agree? At some point of time. After that, again, prices were moving. Because of that, this wick is formed. That is as per candlestick's point of view. But if you apply dynamic view, after reaching, then from then, you start considering this candle. This is looking like rally, rallying, and finally closed here. And that means dynamic view, this is having a very big green body. From here to here, you have a very big green body. That itself is good enough to consider it as a rally candle. Of course, a large wick will be there. This will result as a wick. And this will result as a body. That is what I explained in Q&A 2 video with diagrams. I explained clearly. Step by step I explained dynamic view. That kind of view every trader should build. If you build, understanding ERC candles concepts is very easy. But anyway, this is a drop, base, rally. This rally is as per the dynamic view. Now let me draw the zone. This is the 15 minutes zone. Let me give light color. Okay. Drop, base, rally. This is a 15-minute zone. But look into this candle. This candle does the magic. What kind of magic? The magic you have seen in this diagram, such kind of pattern. At some point of time, prices are going up and then again coming down. And here a price action pushed the file. Actually, what is our leg out? In the dynamic view, you are seeing a rally candle here. Forget about this candle, whatever you are seeing. Think from the dynamic. take, this is the open, low of this candle is like open, and from there it is started moving and it closed, and see a green candle you will be seeing here. The entire wick will result as a green candle. That kind of view is dynamic. And that kind of view you will be able to see in lower time frames, not in this higher time frame. Let us assume this 15 minutes zone, this is a fine-tuned zone inside the high liquidity zone. 75-minute zone is a high liquidity zone. Inside that zone, you have this 15 minutes fine-tuned zone. Now our focus is on 15 minutes leg out. The 15 minutes leg out is doing the magic. How it is doing? Now go to the 5 minutes. How many 15 minutes of candles you will be seeing? In 5 minutes, 5 candles we will be having. Sorry, 3 candles. 3 5 minutes candles are equivalent to 1 15 minutes candle. Now go to the, and moreover, what is the time stamp of this 15 minutes candle? See here, the time stamp is 12th November 9:15. That means 12th November, first 15 minutes candle. If you look into the 5 minutes candle, it is like a 9:15 candle, 9:20 candle and 9:25 candle. Those 3 candles are very important for us. Okay, now go to the 5 minutes time frame. In the 5 minutes time frame, see, we have 3 candles here. Before the day, we have a rally candle. Sorry. First of all, already even before that, there was a zone created. You have a drop, 3 base candles and a rally candle. Let me draw the zone, you will get clarity. This is the fine-tuned 5 minute zone. We have a drop, 3 base candles and rally. Again there is another rally, base rally with hidden body, dynamic view. You have a very big rally with hidden body. Up to this close of this candle, there is a very big body, green body in the dynamic view. Again prices came down. Why I am not drawing again a rally, base rally? Because this is the zone, drop, base, rally is the origin for this rally, base, rally. It is like a LOTL zones. So that's why I didn't draw. I am taking this as a reference. Generally when order flows are very strong, such kind of patterns you will be seeing. This is the area institutions added order flow. Same area again the institutions added the order flow. Like that they add multiple order flows in this area. That way you get LOTL zones. Rally, base, rally. Here you have drop, base, rally. This is the origin. This is the origin for the remaining actions. So that's why my area is within this area only institutions do lot of actions. Adding new order flows, such kind of decisions they take within this area. So that's why this is my reference area. See, when prices are coming, some of the existing orders will be consumed, some more few orders will be there. Now in this area, again, institutions added some more new orders. How can we say? Because rally, base rally is formed here. With hidden body, a rally candle. So that is the reason why same area institutions are adding the new order flow. Okay. Now what happened? Prices came down, picked up the order. Even this zone is slightly pierced. Slightly. See the low of this candle? Low of this candle is 1710.50 paisa. See this low of this candle? 1710.35 paisa. That means 15 paisa further below prices came. That means this order flow, rally base rally order flow is gone. But this drop base rally order flow, it is consumed. Is there any new zone from this zone? No. After that there is again a drop candle, rally candle. Now, being a supply demand zone trader, sometimes forget this new concept you are learning. For you, this is a tested zone and no more order flows. Next time prices are entering into this zone, do you take the trade? No, we don't take the trade because it is a tested zone. That is how our so-called our great trainers are teaching to us. A zone is tested, don't take the trade, leave the zone. And institutions knows that point. That's why they want to trap us. What way they want to trap us? Not get into this zone at all. They are trapping us, not entering into this zone. That way they are trapping us. They are not trapping our money. They are trapping our entry. Hope you got the clarity. So we are not placing any entry in this zone. Institutions are happy because their order flows won't be disturbed. But where is the order flow here? In the 5-minute zone, there is a drop candle, there is a rally candle, there is no order flow. How do we take a trade? This is the question you may ask. That's why. What is the explanation I have given? In this area, during this push, or maybe here in this push, here you have 2 candles, here 1 candle. Whatever way. In this push, if you go one more time frame below, there is a order flow. You will find either maybe a drop base rally or maybe rally base rally. The main horizon you have to take. What is the main horizon? This is the area. So currently we are in 5 minutes time frame. The next time frame is 1 minute. So definitely you may find some good order flow in this lower time frame, and that order flow is responsible for this leg out formation. See here, the prices are entering. That means this entire leg out has been completed, right? Earlier at some point of time it is looking like a rally base, rally huge candle, but all these candles are part of our 15-minute zone. At this point of time, the high of this candle, it looks like a very big green candle with a hidden body. Of course, from this, but the main candle from this area. Sorry, this is the previous day's candle. Base is previous day. Today morning 9:15 with a gap up. It looks like a green candle. Candle is opened. This entire thing is wick, and this entire thing is body. And you will be getting a hidden body. This entire thing looks like a big rally candle. Immediately what happened? Prices entered into the zone. That means entire leg out has been gone. Why it is gone? Because it looks like now a failed ERC candle. And moreover, the body came inside the zone. Now next candle what they did? They pushed, and finally the 15 minutes time frame is completed. 15 minutes time frame started in this candle, completed in this candle. Let me draw a horizontal line here. The close of this candle. And this is the actual leg out in 15 minutes candle. I repeat, this is the actual leg out. And this leg out is formed from here. Probably this is also a wick in the leg out. Now let's go to the 15 minutes once again. Let's go back to 15 minutes. Now see 15 minutes candle. Exactly at the blue color line where I have drawn, there you will be seeing the closing of the 15 minutes candle. See here. This is the candle. Dynamic view, this is a green candle. This entire wick will be a green candle. This entire wick. This entire wick has come from 2 candles. 2 5 minutes candle. The 5 minutes, morning 9 o'clock, 20 minutes candle, and 9 o'clock, 25 minutes candle. Together, you will get this entire wick. Dynamic view, this entire wick is like a body, a green body. That green body you will see in 5 minutes candle. That is what you have seen in the 5 minutes candle. See this entire green body. If it is a single candle from here, let us assume, single candle from here. So from here you will be seeing, instead of this wick, from here you will be seeing a very big green color body. That example I will show you in the next example. That kind of scenario. So now you tell me, which candle is responsible for the actual leg out in the 15-minute zone? Not this candle. A part of this candle is the wick, and another complete candle, the 5 minutes candle. This whole thing, assume your green body starts from here. That means the whole thing, probably in 1 minute you will see that kind of scenario. But even before that, actual order flow you will see in the 1 minute candles. And 1 minute candle order flow is responsible for 15 minutes leg out. Why? Because we are looking one more time frame, because 5 minutes we didn't see a clear drop base rally here. We have a drop, we have a rally. There is no base candle. Suppose 15 minutes itself you are seeing drop base rally. Next time in that area you can plan your trade. Anyway, that is within this area only, the horizon. Now go to the 1 minute to find the actual leg out order flow. The actual leg out order flow you can identify in 1 minute candle in this example. Go to the 1 minute. See here. You have a drop. This is what happened in the 5 minutes when it came. This is the failed ERC candle as a lagging. This is a drop candle. You have a base candle. You have a rally candle. Now you draw the 1 minute zone from here to here. Let me increase the thickness of this. Okay. See, now this is the 1 minute candle. In this 1 minute candle, you have the actual order flow. Prices went, again came down and again moved. You may say like that. Yes, here also rally to one base candle, another medium size candle also part of the base, again a rally candle. That way also this is happening within this zone. Next rally base rally is there. We are not considering this mainly because this is if you expand, is it a tiny candle or medium size candle question? And moreover, it is not a fine tuned zone. Maybe rally candle, a medium size leg candle, again rally candle with gap up. If it is a tiny candle, then you can plan rally base rally, but it is not a fine tuned zone. This will be going to be an aggressive trade setup. Any price action clues at the time you can plan the trade. Otherwise you won't. They will be easily violated. But the actual order flow is started here in this candle. See, in this entire week you have the order flow. Some of the orders consumed here, but here again a base is formed here. Again a rally candle is formed. That means this is the area. This is the horizon now. For all these price actions, this is the horizon, drop base rally. And such kind of zone, you will be having a very strong order flow. Such kind of zones may work like a high liquidity zones. It may give you 2 or 3 tests sometimes. Not sometimes, many times. Such kind of zones, many times they will be giving you 2 or 3 tests. Of course, sometimes they may violate if the supply is dominating and consumes all this. Already very big order flow is there, but supply is even bigger than this. Such kind of scenarios only, these kind of zones will be violated. They are very rare. They are very rare. See what happened on the last trading session. Because Thursday is the last trading session. Thursday. Today Friday is a holiday. The last trading session, see prices entered into the zone. Now let me go to the 5 minutes to get better clarity. See prices entered into the zone, picked up the orders. The moment, see they entered, see actually it looks like a tested zone normally. This is a tested zone. 5 minutes point of view, see it is a tested zone. The zone is tested. Prices moved up and came down. The zone is tested. More than half of the zone prices went, a small portion near the distal line. Maybe there could be weak order flow, maybe it will be violated easily, anything will happen. But this is the area, the leg out order flow is there, the real leg out order flow. Because leg out formation is started from here. And here a part is a drop, and another part is a base, and another part is a rally is there. That is what we have seen in 1 minute candle. We have a drop, here a base, and then we have a rally. There a huge order flow they added. Very big. What kind of order flow? An order flow that creates a leg out. In just 2 5 minutes candles, the leg out formation is completed. Probably this could be the last minute of the 5 minutes. That way we can assume. Because that is what we have seen in 1 minute. In the last 5 minutes, 1 minute. See the timestamp, you will understand. Look into this candle timestamp. This is a 9:23. There is one more candle, 9:24. 2 candles. This is the 9:25 candle. 26, 27, 28, 29. And here, see here, it is closed. The entire leg out is closed here. So from here, the movement is started. That means institutions are started adding huge order flows here. They are adding money, 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 and pushed. Maybe supply also might have been added by some other institutions. And in these 2 candles, they consumed. Again here, new order flows are added, institutions. Again they pushed. And finally it is closed. And next there is follow through candles, and then slowly prices moved up. That you have seen in the 5 minutes candles. And finally, the last trading session, prices reached at 9:40 candle, 9:45 minutes candle. What is the target? Target generally 15 minutes, but this time the 15 minutes target achievement is not really. This is the 15 minutes target. Let me draw a supply zone. Achieving the 15 minutes target may not be easy. What is the reason? Because here something is preventing the prices move up. Go to the 5 minutes, you get even better clarity. Something is preventing here. Let me draw a horizontal line. So probably in this area, somewhere in this area. See, prices reached and sharply they came down. Prices reached again, sharply they came down. Once again they came down. Once again they tried and again came down. And once again morning, this is 9:15 candle, because 9:15 a huge order flow, maybe it went a little up, again sharply it came down. And again after getting from that line it reached, from there only again it came down. Once again it reached, from there only it is moving the rest of the day within this. Why? What could be the reason? Maybe in this area there could be some 1 minute zone might be available. Somewhere here. Let us check. A high liquidity zone that might be preventing the prices to reach our 15 minutes target zone. If that is the case, our price will struck up in this line. So that's why you have to observe. There is a concept called support and resistance lines in technical analysis. In the conventional technical analysis, you have these concepts. People draw support line, resist. This blue color line is like a resistance line. Why there is a resistance from here? Definitely there will be a zone here having a very strong institutional order flow, and probably that is acting as a high liquidity zone. So let me see here, you have a rally base drop. Drop base drop. If I consider this as a rally candle, maybe 2 base drop, that way also we can draw. Or if I consider this as a drop candle, then probably I have to draw the zone like this. So let me consider, or maybe we can consider this is the drop and these 3 base candles and drop. Either way we can do, but let us add some extra order flow so that we can understand. See, from this area prices are coming down. From this area it reached and again coming down. From this area it reached and again coming down from this area. That means this 1 minute area is responsible for holding the prices. Here it looks like this zone is violated, right? 1 minute zone. But this is happened during morning at 9:15. So don't give much importance. 9:15. Sometimes there could be some freak orders also might be there. See, it looks like it opened gap up, but how sharply it came down. Maybe who knows, it could be because of freak trade. Otherwise the prices would have been coming down like this. So that's why this zone looks like pierced, not giving much importance. See, that is what happened. See, prices reached again, sharply came near to the zone and once again moved, and finally here it is violated. But prices were moving there only, majority of the day. So that's why this is the area you have to book. If you book your profit immediately here, you could be lucky person because you saved your day. You exited and your money you would have invested in some other stock. Otherwise, if you keep on waiting, probably you exited. See how much time you consumed here. Sometimes the lower time frame, the 5 minutes or 1 minute level HLQ zones might be preventing your actual targets to reach the prices, your actual target, the 15 minute zone. For high liquidity zone trades, 15 minutes is the target, not the 5 minute zone. But if there are any 1 minute or 5 minutes high liquidity zones are there, you have to change target to those high liquidity zones. Because most of the time those high liquidity zones may consume at least 1 minute will be violated after several attempts, few attempts, not several attempts, few attempts. But this 1 minute is exceptional. Majority of the day, this is the area holded the prices. But many times 1 minute high liquidity zones after 2 or 3 attempts it will be violated. The lifetime is very small for 1 minute high liquidity zones. But it could be an exceptional scenario. But whatever it is, see how much profit it has given. And moreover, earlier prices went deep inside. Go to the 5 minutes, you get clarity. Earlier prices went deep inside. See, they went up to here. Generally what you see, how deep they went. So we expect prices, at least if it is a successful trade, next one let us assume it is successful, the trade should be below this candle. But see here, where the trade took, almost near the proximal line it took. To be honest, not even this exact 5 minute zone it did not enter. Came very close to the entry. Very close. See here. This candle came very close. This is the actual 5 minutes entry. If you are taking the entry from 5 minutes time frame, you need to add some entry buffer here. Then only your trade would have been executed. But this is the actual 1 minute zone. That's why our entry should be here and our stop loss should be here, or a little before a stop buffer you have to. You should not use your stop loss at 1 minute level, at 5 minutes, because 5 minutes some more order flow is there. Because this is the origin, this drop based rally is the origin for the rest of the price action from this zone. So that's why you should respect the remaining order flow in this zone. The remaining, there could be again some order flow is there because actual leg out is started from here. Even though we are giving importance to this candle and this candle, but initially it started from here, the leg out. It went up to this zone. Institutions, what they are doing, they are creating an impression that this zone is a tested zone. Still there is some more order flow in this zone. So that's why your stop loss should be at this distal line or a little before by adding the stop buffer. That way you have to plan your trade. And from here to this 1 minute HLQ zone, the RR is 7.7% during the intraday RR. 7.7%. Who knows, next time this zone may give another second test or maybe third test also it may give. Because such kind of zones will give multiple tests. 2 times or 3 times. Definitely we can plan our trade next time. But will it be violated? Rare situations it will be violated. When supply is very, very strong, equally as stronger as this existing demand, in such kind of scenarios, zones will be violated. They are rare scenarios. In those rare scenarios, if you take a trade, that is an unlucky trade for us on that day. But anyway, our risk will be known. Before taking the trade, you know the risk. If you accept the risk, then only you take the trade. If your risk is a little higher, adjust your risk in such a way by taking the deep entry a little below. Previous low below, you plan your trade. If it reaches, you can take the trade. If your risk is high, beyond your accepted limit. Luckily, if prices come, you get the trade. If price again touch and move up, you will be missing the trade. That is okay, because that is beyond our risk management. And let me give you one more example. That is the high liquidity zone, daily high liquidity zone for Cholamandalam Finance. Some spelling mistake. CHOLA. So Cholamandalam Finance. And last Thursday we got this trade, because last Wednesday means on 13th November 2024, our NeoStock high liquidity zone recommended this stock. Because it is near to the zone, it is recommended. And the last candle, that is Thursday. Today Friday is a holiday, but Thursday we got the trade from this zone. And this trade is also the same concept. This leg out candle. First of all, what is this zone? Let me explain. Let me hide this big candle. Because of the big candle, this candle formation is not very clear. Now you see, this is a drop, 3 base candles, and a rally candle, and again sharply prices came down, and it is looking like a failed ERC candle. But it is a qualified leg out because body is coming out of the zone, a considerable move out of the zone from the distal line, from the proximal line, a considerable move, the body has come out of the zone. In such kind of situations, this failed ERC candle. Anyway, the candle is a large candle, but failed. What is failed? Failed to maintain the body. That's why we have given the name failed expanded range candle. It is an expanded range candle, but failed to maintain the body of the candle. But whatever the body is there, that is good enough to consider the leg out. So this zone is identified by our software. Next candle is follow through candle. This is not the leg out. This is a follow through candle. This candle is good enough to qualify the leg out. But institutions did the magic in this area. What is that they did? Okay, let us focus on the 75 minutes fine-tuned zone. The 75-minute zone itself, if you look into this, look into this candle. At some point of time, first let me hide this candle. See, at some point of time, institutions created a leg out from this zone. This is 75-minute zone. This is a 10:30 candle, 75 minutes. This is 11:45 candle. This is a 13 candle. You will be having 5 candles in a day, 75 minutes. This is the first candle. Second, third, and fourth. Okay, what is the 75-minute zone here? You have a drop candle. You have 1, 2, 3 base candles at the hidden body, This is going to be a rally candle. This is a very big candle, rally candle at the hidden body, 75 minutes body, and another follow through candle. Again base, again another candle. It looks like a very big candle from here. By the time prices reaches to this area, this will be a very big green candle on the daily time frame. After that, institutions did the actual magic. Okay, anyway, we have drawn this 75-minute zone, drop, 4 base candles and a rally candle. This is a rally candle with hidden body. Already hidden body concept you learned in lesson 9.3 and 9.4. The practical lessons I have explained these concepts. So this is a fine-tuned 75-minute zone inside daily high liquidity zone. And here the 75 minutes candle, see, prices came down. That means whatever the big green candle has become big red candle when prices reached this 5-minute zone. There is a 15-minute zone below. Actually they entered into the 75-minute zone, but here you have the actual lower time frame order flow. And again came up. Everything happened in the last 75 minutes candle. Is it really happened in the entire 75 minutes candle? Or again the last few minutes of the 75 minutes candle? That we will see in the next 15 minutes time frame. At some point of time, this is a drop candle. Again, after that, again it started as a rally candle, big rally candle. That means here you have institutions new order flow that you may see in the lower time frames. To understand that, let us go to the 15 minutes time frame. Is there any 15-minute zone inside the 75-minute zone? That you need to understand. Yes, there is a 15-minute zone inside this zone. What is that 15-minute zone? First we will see. Here you have a drop candle. You have 1, 2, 3, 4, a medium size candle, also part of the base. So total you have 5 base candles, drop, 5 base candles and a rally candle. This is the 15-minute zone. Now what happened? The last 15 minutes of the day, earlier we have seen the last 75 minutes candle, but actually it is not in the last 75. Last 75 minutes candle, the actual institutions play has started. What is institutions play? They have to create an impression that this zone is a tested zone. Already by this time, this entire thing is a very big green candle up to here. The high of the candle on this day. Now institutions started the play from 13:45, 15 minutes candle. What they are doing? Pushing the prices down. And at 15 hours candle, they pushed very sharply inside the zone. And the last 15 minutes again further pushed, because the push is not happened up to this fine-tuned area. Here inside the 15 minutes fine-tuned area is there. And inside the 15 again 5 minutes fine-tuned. This is the 5 minutes. We have 5 minutes fine-tuned areas, but our interest is on this first one, because that is the actual origin. And this and then further pushed, and now they might have created a zone in the lower time frame and then started pushing the prices. Is this push happened from the 5 minutes, or they created some drop base rally and pushed? That we will see in 5 minutes. You will get clarity. So let us go to the 5 minutes time frame. The fine-tuned 5-minute zone. Observe carefully. Institutions created a rally base and one more medium size part of the base and rally candle. This rally base rally, institutions kept the actual order flow. Okay, there is one more drop base rally is there. It is a tested zone. This is not related to our concept. So we will focus on this. Rally base. This is the origin. Why I am saying this is the origin? Because they pushed the prices. And what is the low of the zone? See, the low of the candle is low of the zone. What is the low? 1178.60 paisa. Remember this value. Why I am saying this? I repeat again, 1178.60 paisa. See, the last 5 minutes candle, they pushed into the zone. What is the low of the candle? 1178.45 paisa. $1178.60 paisa. Here the low is 1178.45 paisa. So it looks like the zone is slightly pierced. It looks like. But the actual order flow is started from here. So definitely at 1 minute, so in this area, you have some drop base rally or rally base rally will be available. For that, you need to observe in the 5 minutes, 1 minute time frame. But unfortunately, TradingView will provide only last 3 or 4 months, 1 minute data only. And this candle is on 30th April. Almost end of the April. So May, June, July, August, September, October, November. We have 7 months now. From this candle, we have 7 months completed or about to complete. But TradingView is providing 3 months data or maximum 3.5 or 4 months data they are providing. So we can't look into the 1 minute. But definitely, you have seen in the previous example, a 1 minute zone. Here also definitely a 1 minute zone will be available. That is the area where you should plan your trade. But institutions created an impression it looks like a tested zone on the 75 minutes time frame. The zone is tested. Because it is a tested zone, you don't plan any trades in this area. But next time what happened? Next time means the last trading session. Because this was the HLQ zone identified for the last trading session. See in the last trading session what happened? Go to the 5 minutes. At 9 o'clock, 40 minutes, prices just entered into the zone. It touched the digital line, maybe few paisa. They went below and immediately, sharply, how it moved up. Sharply they were moving and finally reached this target. What is the target? Here also we might be having a lower time frame zone because see, from this area they were started moving up. And moreover, 15 minute structure is not there at all. Near area, this is the only one, drop, base, drop. This is impossible to achieve because at least 20 to 25% ROI intraday or getting 20 to 25 is almost impossible during the intraday. Until this blue color line, because here we have resistance holding the prices, there could be lower time frame zones will be available. Actually, I went to 1 minute. 1 minute also I didn't find the zone. Not clear. Why? Because the leg out is not really great. But still, if you compromise and draw a 1 minute time frame like this, see, this is holding the prices. We got the entry and again reached this 1 minute zone. Of course, in this candle very near. Somewhere here you booked your profit, either in this candle or in this candle. You know how much profit this zone has given? It has given 11.8% ROI. When you got the trade, morning 9:42, 1 minute candle. And when it reached the actual target, this 1 minute, 10 o'clock 21. That means in 40 minutes, the trade is completed. 40 minutes, you got 11.2% ROI. To get 11.2% interest rate for your investment in banks, how many years you have to wait? 2 years or 3 years? But here, in just 40 minutes you got. And who is the reason behind this? The reason is a special price action in the leg out candle. What is that special price action? This kind of pattern. Prices should go out of the zone, the leg out, in the leg out. Prices are moving up. Again leg out is coming down. And again a huge candle. See, this is the example you have seen in this chart. The 5-minute zone, the formation you have seen. In a single candle, entire thing happened. The 5 minutes candle. See, this is the entire leg out is from 5 minutes. Finally, price is closed here. This is the actual closing of your leg out candle, the daily candle. Actually, this is the daily leg out is because of last 5 minutes candle from this zone. See here in this example, exactly came near to the digital line and sharply moved, and here the leg out, this leg out is completed. Exactly the same way. This is the 5 minutes candle. Now go to the daily zone. See, this leg out is completed. See how beautifully our NeoStock software recognized this zone. A drop, base, rally. And many of us will leave such kind of zones because it looks like some base candle. Of course, it is a big candle only. Because you learn failed ERC concepts, at least our NeoStock students identify this candle as a failed ERC. But people who learn from the other institutions, they consider this also part of the base. They draw the zone, maybe draw rally 1, 2, 3, 4 base candles and a rally candle. That way they draw. That is imperfection. But software is rule bound. Clearly we define the rules. And moreover, our software is a highly complicated software. Perfectly it identified. And moreover, the concept you learned today, those rules are applied here. And which resulted as a successful trade. Not only a successful trade, and it has given you until this 1 minute HLQ zone target, it has given 11.8% profit, and that 11.8% ROI you received in just 40 minutes time. So that is the power of a special price action at leg out candle. Actually, I should have given a good name for this concept. But I was thinking, I didn't find. Finally, okay, I am compromised with this. A special price action, or sometimes you can also call a price action at leg out candle. Remember, it is a new concept. It is a new concept. And I developed by observing this concept. Of course, I observed for the last 2-3 years, I observed this kind of price actions in failed ERC candles. Need not be failed. Even a clean leg out candle, it looks like a big rally candle. There also it may happen. Prices can come down, and again at the time of closing, prices may reach till again the high, near to the high of the zone. Don't think that this kind of price action you will see only in failed ERC candle. But majority of the times you will see in failed ERC candles. But rarely you will also see the complete leg out having more than 75% body. That is such kind of candle also may happen. See this candle? Almost 75%. It is a large candle. Large candle, we don't bother about the percentage of the body, but still more than 75, even such kind of candle also, prices again sharply come down and once again it will push up to this area. That possibility is also there, but not easy in such kind of zones, because again while pushing back, the market times might be completed. That's why such kind of scenarios in complete green candles, it's not very practical, but still possibility is there. But failed ERC candle are candles having less body compared to the wicks, such kind of large candles. I'm talking about large candles because leg out candle should always be a large candle. So in such kind of candles, mostly such kind of failed ERC candles, you will see such, whenever you see a failed ERC candle as a leg out, actually this is not a failed ERC candle, you have sufficient body in this candle. Maybe the body could be 50%. Even such kind of candles, you will see such kind of price actions. Need not be failed, but candle is having a large wicks, having sufficient body, and also having large wicks. Probably that is an indication something happened in the leg out. But don't think that every time it will happen. If it really happens, you should not miss that stock. Next time you will get a very good push from that stock, because many traders, retail traders, they will be away from that zone, because we feel like it is a tested zone. Tested zone means, okay, we learned the concept, tested zone cannot be traded, a thumb rule somebody has thought, and always you will be believing that person. They are the old concepts. These concepts developed in the year 2007-2008 time period. Almost 15 years after that, now we are learning these concepts. So institutions, do you think they are dumb people? Do you think all these days they are watching if somebody is coming and taking their order flows? They will be changing their mindsets. When they are changing their mindsets, how their mindsets are getting changed, we have to observe through price actions only. Why these failed ERC candles are happening, or why candles having not failed ERC candle, large candle only, but it is also having large wicks. Why they are having such kind of study I did. First your mind should always think why it is happening, why. If your mind will be thinking like that, you will develop hundreds of concepts. Because I will be thinking like that only. That's why always I find reasons, observe many things. And moreover, on the top of that, I have the software development skills. If I have any idea in my mind, immediately I developed some program and I will try to observe the historic data, what is happening. That is one additional advantage I am having. That way I studied these kind of concepts. But why you are learning step by step is, first you people should get control on the basic concepts you learn. All these are all very, very advanced level concepts, and moreover, some of my concepts are new concepts. You are learning in phase 3 training many concepts. Even phase 1, phase 2, I explain new concepts. The hidden zones and hidden bodies, all these are all new concepts I developed. When a zone will be violated, it is a new concept I developed by doing a lot of observations. And the price direction is completely a new concept that is a game changer for bullish and bearish trade setups. Eliminated many false trades. That's a new concept. And these bullish and bearish trade setups with zone confluence and with EMA confluence, the combinations, they're all new concepts. Because different rules I applied for different combinations. When you have LTF and ITF zone confluence, a different rule for EMA confluence. For LTF, ITF, HTF confluence, another different rule. Those rules you can see in premium videos. Because premium videos, I am identifying high probability zones like that only. I am not saying high liquidity zones. I am saying high probability zones. High probability means the zone that might be having higher success rate. It need not be 80% success. 80% maximum as given by HLQ zones. Maybe high probability zones may give you up to 65 or 70% success rate. Probably they are the zones, if the trend is changed, probably they are the zones will be violated at the last compared to the remaining zones. If you look into the monthly and weekly bullish or bearish trade setup, see, now market is downtrend. But some of these high liquidity zones having LTF, HTF, ITF and EMA confidence, still they are not violated. Maybe this downtrend continues, maybe after few days they might be violated. But already they gave you few tests already. They might have given you some returns already. At least short-term returns they might have given you. Instead of reaching daily supply zone, they might have reached 75 minutes supply zones. That kind of profits they might have given you. See, when market is overall market is downtrend, you can't expect your target, your daily target will be reached for monthly income trades. Because daily entry you are taking, daily supply zone, the overall market is in your favor, easily they reach daily supply zones. When in the overall market is downtrend, you are taking a trade in bullish trade setup, mostly it may reach 75% zone instead of daily zone. Excuse me. Okay, but whatever it is, all these new concepts, how we are developing, which are not there in the market. Simple, we have to apply our brain, that's it. If we people, we human, if you think anything we can do, we can develop new things, it is possible. But only thing, your willingness should be very important. Why others did not develop this kind of supply demand zone software? Generally people think Americans or Europeans, they are very clever, they develop such kind of things. But an Indian developed this kind of supply demand zone software. Why not the Americans or why not the Europeans? The reason is simple, the willingness. I already explained in Q&A 1 video how I developed this software. It's my dedication, that's it, very simple. My dedication, and I didn't sleep until I reached the goal. Finally I was able to, and what kind of software it is? A very advanced level software. A software that supports ERC and is a software that supports zone confluence, EMA confluence, all combinations. A software that supports pierced zones. And moreover HLQ zones. Some more advanced concepts you will be learning in the coming days, counter trend trade setup related concepts. Of course it takes some time, because unless you get bullish and bearish trade setup very comfortness, getting into those concepts is dangerous. You need to gain experience. See, teaching is very simple, but teaching in such a way you will understand is not easy. So that's why I'm taking time slowly, step by step. I'm making you people get perfection in one level, giving you some time to practice those concepts and implement in the real-time markets. Because phase 3, you are learning so many concepts, everything, they are not available in the market at all. Such kind of, this is one concept. Is it there anywhere in the market? No. You won't be finding any books. First of all, I don't refer any books. All this, everything I do, I work. Maybe I interacted with some experts and I learned few concepts, or interacted with some friends and I gained some knowledge, or I observed something and I gained the knowledge. I did experiments and I gained the knowledge. Argued with experts. Argued means some kind of discussion, brainstorming sessions. That way I gained some knowledge. I used different mechanisms to gain the knowledge. You may ask a question, why you didn't believe on the books? Books means these concepts, see, old concepts will be there in the books. Probably 2014 or 13. Even whatever you learn in the first phase, though that depth also probably, it would not have been covered in the books. I'm sure about that. Whatever you learned, In phase 1, that depth also may not be available in the books. People should do experiments. When people wants to do experiments, they have to spend a huge amount of time. See how powerful this concept it is. But anyway, now you learn these concepts. In future, maybe you may see such kind of, but you should be very careful. If you make mistakes, again you will be getting negative results. Please remember. Because I have seen many of the people, they are learning half knowledge. Suppose if the training lesson is 1 hour, they are completing the lesson in 15 minutes or 20 minutes. By doing fast forward or something, by skipping some concepts. Those people, they never get. But there are some people, minute by minute they are learning. If required, they are repeating second time, third time, they are noting the points. That way for 1 hour lesson, they are listening for 10 hours. That way they are gaining the knowledge. Some people, I have seen. Today they are doing very well. They are getting good profits today. That is the way people should learn the concepts. When I took nearly 15 plus years to develop all these software and concepts, more than 15 years. And if you want to learn all the knowledge in just 3 months, 4 months, is it meaningful? Sometimes time is needed so that our mind will digest the concepts. If I give you next 1 week food in 1 day and if I ask you to eat, will you be in a position to digest? It is impossible, right? Exactly the same way knowledge also. Some people keep on attending the listening without any practice. Do you think it is effective? I don't think so. That's why in the training instructions I have provided, in our Telegram group they are available in the pinned messages. On the top of the window you will be having a pinned bar. There you can find those pinned messages. There I have given instructions. Or in your training videos, probably from the top, the 4th or 5th or maybe one premium video is available, premium. In that video I have explained all the training instructions. So you have to follow those instructions. That way you have to practice. Then only you will become a very good trader. You will become an independent trader. You will become an expert. You may ask a question, when others are not developed these concepts, how I am able to do? Somebody has to develop, right, any concept. How somebody will develop? With observations, proper observations, a lot of study. People by doing the research, what they do? They develop new concepts because they are observing many things, finding the things, observing the similarities. That kind of mindset everybody should develop. Then you will become a very good trader. And people are asking, okay, provide me recommendations. Then you will never become a good trader. You have to study. Knowledge only will make you become a good trader. That knowledge I am providing you. So please take these advices. They are important. So this is about lesson 26. Hope you might have enjoyed this lesson. This is a very good concept for getting good profits. Next lesson is yet to be decided. Again, after observing your practice and the level of your understanding. Because you may ask a question, how you will know our level of understanding? Based on the kind of questions you are asking in the comment section. Based on that only I will be able to understand your level of understanding. Based on that only next topic should be taken immediately, or I need to wait for next 1 month or 2 months or next 1 week or few weeks. That decision will be taken based on that only. If more and more people are keeping your understanding in the comment sections, it is like you are giving me a better choice to understand your understanding about the subject and plan my next lessons. Otherwise, I will be assuming you will be still practicing. Okay, this is about lesson 26. Let's all meet again in our next video. Thank you.